morning, everyone. It is a beautiful Super Bowl Monday, February 12th, 2024, and this is the War Room. I am, of course, AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. Happy to be back. I was gone Friday for my 30th birthday. Spent the weekend getting my AARP card and plastic wrapping all my furniture. So I'm really excited to enter this new stage of my life with the War Room gang. Fun article I saw this morning, over or about 16 million people around the United States will have something called the Super Bowl flu today, which means, about, I think 10 million have already requested the day off and 6 million will risk some sort of workplace penalty for calling off sick today. So if you're with us this morning, we appreciate it. So if you have anything you'd like to talk about, whether that be sports, whether that be the markets, join the discussion, post a comment wherever the comments are available on the platform you're using. And we're always available to answer any of your questions or comments at info@agyield.com. That's enough rambling from me. Let's get to the nitty gritty and kick things off with Dustin. Dustin, what do you got for us?
Yeah, thanks, Jack. So I'd say, coming out of the weekend, we've had a little bit of a bounce. There's not a whole lot of news over the weekend, though. We have energy prices down just slightly. No major developments geopolitically. We did see potential ag rules raising the corn crop in Brazil just from surveys that the growers are planting in larger area than expected. We'll see if that materializes anything today. I think one thing I wanted to point out going into this podcast or this session was the funds have raised their corn shorts again as of Friday's data. So this is as of Tuesday, the 8th. So they're continuing to build more and more corn shorts. We're seeing that show up on flat price hitting new lows. We're seeing that show up on corn spreads hitting new lows. So on that day, actually, the July D spread went down to 19 under on corn. So just continuation of what we have been experiencing is that there's an appetite to be short. There's technically it's almost like a dividend to be short corn right now because there's a pretty good sized carry in the market. So every time they exit a lead month contract, exit a short and then sell the next month out, that's a roll at a carry. Even though it's a paper roll, it still gives them a lot of longevity. So until there's anything that shakes them up, that's what we've been experiencing. We really need something to change the narrative a bit to scare them out of that position to start getting some different pricing is what it feels like.
Yeah, Dustin, I was going to add to that on the quantities. I know we talked about, in the last 12 months, just corn and soybeans combined, they've sold over 4 billion bushels of corn and soybeans in 12 months, just to kind of give a perspective of how many contracts that is. They basically went from almost a record long to a record short. So it's just pretty massive amount in 12 months. And, the fundamentals change. There's reasons for all that, but it's still, the difference of them being long 400,000 contracts or short, it's obviously a big difference in our markets and how the spread structures and all that kind of work.
Yes. Yep, that really, I think, is a lot of what explains what's happening right now is that there's a lot of corn that hasn't been sold yet. And on paper, there's a lot of spec shorts that exist. So that transfer of ownership is probably going to happen either way because we need to raise cash for the next season. And that's going to happen probably prior to the summer timeframe. We're not going to hold on to this forever. So this is a critical month where not only we're setting the insurance price for next year's corn, we're also running right into a big first notice day, which is March at the end of Feb. So this is about the time frame, middle to end of Feb. We start getting the phone calls about anything that has been delivered on basis that's not yet priced. Start seeing what do growers do with those types of contracts? Do they sell or do they roll? Either one could be another weak point for the lead month contract, the March contract, like we saw in the last two rolls in the SEP and DECE roll. So that's what we'll be watching for and talking about over the next couple of weeks. And that's what I would expect.
Thanks for that, Dustin. If no one else has anything to add, let's shoot it over to Ben. Ben, I know we talked a little bit about how it's been a quiet weekend and other things of that nature. We're in the fourth day of a roll. What are you seeing on your end?
Fairly quiet weekend of note in the Middle East. Israel did free 2 hostages from being held by the Palestinians, and it was accompanied with some pretty heavy airstrikes. And I think that what this leads to is the general mindset that the Israelis are shooting for, that they are not budging on what their end game is. And that's going to continue to create turmoil with a lot of the Arab countries that are supporting terrorists and that are backing the Palestinians. So I just don't see this getting better anytime soon. And I don't know that it escalates, but I think it just is a continual kind of feed of clashes and things happening until the Israelis get everything they want, which is everyone freed. And to kind of their mindset is to kind of reconstruct the whole narrative over there. So don't see a lot changing there. Just jumping on to Dustin's comments too, and Justin's about the role and growers and basis contracts and how that works. I do think that this is starting to be a heavily prescribed trade, and I think it'll be really interesting to see how things shake out when we get to as we get closer to first notice day. And I think the market has a little bit of a wedge between a tremendous amount of option open interest right above the market and the perception that there's going to be some heavy selling into the end of the month. And sometimes these trades can get oversubscribed, and when they do, we can see a sharp reaction. That doesn't mean that's going to happen now or this year, but at some point when we head to delivery, it's going to send a message that this trade is probably exhausted. So we'll see. Large, short. I think every day that we get closer to putting a crop in the ground and having the risk that goes with having a crop in the ground, that window for a orderly exit closes just a little bit, and it would be atypical for managed money to carry massive short positions into a growing season. So just something to watch. That being said, they have all the money right now. They've taken very little heat on this trade, and they're about to collect another, call it 13 to 18 cents on their roll. So, they're sticking with a winner for the moment.
Excellent stuff. From there, let's jump over to Ryland to hear a little bit about what's going on with livestock.
Hey, Jack. Kind of a mixed day for livestock going, or at least for the meats going into the weekend. Cash trade in the live side was sharply higher, 4 to 6 higher, kind of around the horn. It was pretty late to develop though, so there is some concerns that there could be a little, I shouldn't say concerns, but a little bit of an expectation that we could be a little bit higher out of the gate here. Kind of running up against the February last trading day, which will be on February 29th. And there's still a roll going on. So it does feel like you still got a decent portion of the market that's just moving position around and just kind of repositioning for that. So I think just at this point, with beef market kind of stabilizing towards the end of last week, it was kind of an inside day. Saw a little bit of consolidation across the spectrum. So you kind of priced in a lot of really good news, and we'll see just how much more follow through we need to see. There's already a premium kind of priced into the market right now. So we'll see just how far these guys want to push it, or if the roll has any real effect on getting prices much higher. Also, there were no deliveries against the Feb on Friday, and the oldest date was 10/20. So yeah, I mean, not too much. It still kind of feels like there hasn't been any real downside in sight. I think everybody's just a little bit cautious here just from the last flush out to see if that's still a risk here. But the funds are still carrying a long position. They built bigger longs into the live, into the feeders. So right now it just seems like that's still an attractive trade, and it's not very crowded. They don't have a very big position, especially for the size of this rally. I would say it's very light at this point. So they still have a lot of powder dry if the story keeps on going, and at least seasonally, fed cattle prices pretty much rally between now and June. Just seasonally, they trend higher. So we'll see. I mean, we're already at historical prices. See if we can actually retest those highs on this rally.
Excellent. Thanks for that. Certainly no Super Bowl flu among our crowd today. We're in the mid 30s for our viewers. So, thanks to everyone who showed up and did their work today. Anyway, any other questions? Any more comments from the crowd here? Seems like no.
I would say we just see how the week starts off. It's a slow news weekend, so anything goes for the open. Maybe there'll probably be more to report on tomorrow.
Sounds like a plan to me. Well, again, feel free to hit that subscribe button and join our band of people who tune in every day. Again, we are live on YouTube, we're live on Facebook, and we're live on X every morning, 8:15 a.m. Central Time. I'm Jack Coakley. Always a pleasure to get on camera with these guys, and we'll talk to you guys tomorrow.
Thanks, Jack.
Thanks, Jack.
Yeah, thanks, Jack.